Welcome to another segment provided by Technical Option Traders. Hope you guys are having a wonderful day, right? So let's get started here today. Looking at the market, if you guys watched my previous videos, I've been mentioning that this down move was too aggressive and we needed a push back up, and that's exactly what happened. We got the push above, right? But what's going on here? The bears have come in and they have slapped this market down aggressively, right? So if we look at this move right here, right? So this move today basically took out 1, 2, 3 days of move, right? And I've been mentioning in my video over and over again, this price action where the move up is declining. This is weak. I'm concerned. I don't like this move up. I've been mentioning this over and over again in my videos that this is something we should pay attention to. That if these buyers are real, this would be much more aggressive, and it would be much more continuous. And this selling pressure today, once again, not strong, right? So this is basically sellers overpowering these weak buyers. But then again, if you look at the volume isn't the strongest on here today, okay? So that's something we want to keep an eye on as well. So this is just price consolidating in a zone, right? So if we look at the weekly candlestick on SPY, it looks like this. So we have this level to go to, right? So let's talk about the hourly time frame first. We'll get to the weekly later. If we look at the hourly time frame, we had this move up, right? So we had this move up after this aggressive move down. Even in bear markets, there's pullbacks or there's rallies, there's small rallies, right? So we got a small rally here on the S&P 500, unable to get above 410 and 413. If it got above 413, I was looking to take a long position into 420. So it's not above these levels, so let it stay. It's staying flat here, so that's perfectly fine. Now it's broke below this trend line, broke the support line, and it broke a secondary support. Now I want to see price consolidate, and then if it breaks 384, we're looking easily at 375 upcoming for the S&P 500, and that will be pretty wild considering where S&P 500 was trading just a few months ago here. Okay, so if we get the 375 level, we're back to January of 2021 on the S&P 500. So it's a pretty big level on the S&P 500 to test. But so far, weak volume on the upside. Now we got a sell-off here. Now we need to see what happens over the next coming days here. But overall, continued weakness in the market. Right, so we did make some plays in our community. If you're looking to join, the link is in the bio. So let's continue with Triple Q here. Triple Q on the daily, right, looking weak as well. Like same thing, volume was dead. It was flat, right? So not a lot of participation happening. This move down absolutely killed it, right? So killed the buyers over the last couple of days here. Now the triple Qs are already overexposed here, right? So if we look at this pattern, there's like a head and shoulder pattern here, even on the weekly on the Qs here. If we look at this, right? So if this is the head and shoulder pattern right here, and we have a breakdown where we're currently sitting, if we're already below the neckline, okay? Okay, so this is the neckline. We're below this. Okay, so if this is already broken it once, pushed back. Now the second break above of 284, we will see 260 very soon for triple Q if the selling continues in the market. Okay, so this is actually quite an aggressive move here. Let's look at the daily here. Yeah, so 285 is the level we want to see on the hourly. We were getting this pullback, same concept as S&P 500. This is the downtrend line. If we want to see price action rise above, we need to close above 311 first. Then we need price action to consolidate, push above this trend line, get above 324 and 330. 330 is the critical level. If price action cannot get above 330, doesn't matter what happens, this level price will continue to drop lower. So this will be the key level to watch. If it gets above it, what it does and how long it takes and how aggressive the price action is. So it's not just about movement, it does matter about how aggressive the move is, right? So let's look at the Dow Jones here, right? Dow Jones is what I was talking about, right? We have a breakdown, we have a pushback above, and then we have a breakdown again, right? So like I said before, this is symmetrical triangle. We do have a breakdown here. If we pulled back, we need buying volume. This is weak volume, and these are weak candlesticks, right? So declining volume. And look at the sell today. It just wiped out the previous day's moves on even less volume, right? So these moves are very volatile, right? There's not a lot of participation behind this move, right? So we need to see what else happens. Now, the lack of participation could be that cash people are putting money in cash, they're putting money in defensive stocks. So as you can see, that means right now we're going to have liquidation issues. We're going to have a lot of positions that we take where the bid and ask gets spread out even wider. So we have to be even more careful as we're investing, right? We have to be very careful even as day traders. The spreads are getting wider. So pay attention to this. Looking at the hourly time frame, right? Just like triple Q, SPY, downtrend is holding really strong on the Dow Jones, and the Dow Jones continues to get weaker here day by day. 312 is the level. If it gets below 312, it's done. We're going to go much lower. Okay, looking at IWM. IWM, obviously it had an aggressive move down. Okay, and now it tried to bounce, right? And this is the downtrend line right now. It's trying to bounce. So if it can get below 170, it's gonna fall down aggressively. If we can get a bounce here and it closes above 179, it breaks its downtrend line. I'm looking for a close above 184. So there's two scenarios. There's always two scenarios for the market, right? So looking at this aggressive move here, I'm thinking this pullback unfortunately did not last. I want to see where it bottoms out. If it bottoms out early, we can see a possible break of this downtrend line, push above 180, then get to 185. Okay, so this is for IWM, but overall, if IWM breaks below 170, we're going to 165 really fast. So that's something that you want to keep in mind of right now. And looking at the VIX is absolutely volatile, right? Obviously makes sense because it's a volatility index, right? So if we look at the VIX, like I said, it was breaking down over the last few days, and I said you got to watch for the 23. If you get to the 20 level, we'll fall a lot lower. This is where I'm comfortable. Right now, it's back up here again, right? So it's just trading in a range. So if it breaks out here at 28, we could have a problem, right? We could have a huge problem in the market. So that's something you want to keep an eye on which way VIX goes. If it does go a lot higher, we want to be cautious of that, right? So that's where the VIX is. Gold over here. Gold is trying to consolidate at this trend line, which was previously support, now is acting as resistance. If gold is unable to get above 173 and the 175 range over the next couple of weeks here, gold can substantially fall. However, I do expect gold to do well just because of the monthly time frame. But you know what? It hasn't been able to make new highs after creating this big sell right here, this big sell candle. So kind of gonna have to watch for it and just see what happens, what it does overall. But right now, not bullish on gold and not participating in gold in any way. My level was 175. After that, I've been out of gold and just been observing, not shorting it either. I'm not going to short it until it closes below 157 here. If that gives me an opportunity, maybe I'll look to get in there. All right. So overall, the market's down. Look at ARK here. ARK, this is an important zone consolidating here. It needs to break below 40 and we go back to 35. And that's something we want to keep an eye on. K-Web as well. It's consolidating in the zone, the symmetrical triangle. We need a break in either direction. If we get a break above 29, we'll push up higher. If we get a break below, right here around 23, we'll break lower, right? So two levels we want to keep an eye on ARK, on K-Web, and as well as ARK, right? So ARK as well right here. So if ARK can break down right here and go all the way down to 35. So very similar levels for both of these guys. They're they're at their lows, consolidating. If sellers add on to their positions, this could weaken a lot further, right? However, now I want to focus on the sectors here. The sectors are not doing well, right? So look at the biggest sector, that's semiconductors, right? This head and shoulder pattern, try to bounce, unable to, breaks down, tries to bounce again. Now we have another rejection here, and if we break the 221, semiconductors are pretty much done for here. Okay, XLY, consumer discretionary, is just taking a complete beating. Consumer discretionary is trading back at 2020 levels. All right, so it's given back pretty much all of its gains. Tech is trading back at 2020 December levels right here. Okay, so this is a head and shoulder for tech as well. If tech continues to stay below 140, right, then we're gonna see a lot lower numbers than what we saw over there. Okay, so we could possibly go back to like 112 on tech. So just be careful when you guys are trading out there. This market is very volatile. It's very bearish. I suggest you guys look for setups, right? Like look for if you guys want to look for reasons to go long, make sure the reason's strong enough and price action is confirming it with volume. If there's no confirmation, don't take the trade. See you guys tomorrow.